Hey everyone, sorry for the delay. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. Sorry for the delay there, but thanks for tuning in on this Friday the 13th. 877-927-6648. That's the number to use to get through. And let's see, what else we got going on here. 877-927-6648. That's the number to use to get through. Breakout Investing now. 5 days a week on TFNN from 3 to 4 Eastern. David White is going to be handling the 2 to 3 o'clock hour Monday, Wednesday, and Friday for the rest of the month, and then he'll be going 5 days a week from 2 to 3 Eastern as well at the end of this month, starting in August. Don't forget, you can check out Breakout Investing as a podcast on iTunes. If you can't listen to the show live, so that's a good deal. And TFNN programming is also available on your smartphone. Just type in tfnn.mobi, and you can listen to the stream that way as well. Tiger TV, be sure to check that out on the homepage of tfnn.com. If you want to look at charts live right along with me, you can do that on Channel 1. Tiger TV is also available on your handheld device, so be sure to check that out. And the show is also archived on Channel 13. Let's go ahead and check in on the markets here. NASDAQ composite right now up 1.5%. Nice day for the market today. We'll get into that China GDP data in just a little bit, but the NASDAQ up near its session high, 44.5 points, 1.5% to 2910, making a big jump back above its 50-day moving average. Volume on the NASDAQ at this point, unfortunately, it's just getting lighter and lighter and lighter as the day goes on. Now, it is Friday. A lot of people kind of headed out from work, but volume was never heavy at all today. And basic supply demand rules, when you see higher volume declines on the way down, low volume moves on the way up, it's generally not a good thing. It doesn't mean that we're destined to head into a bear market here, destined for more price weakness, but it's not a good sign. Heavy volume declines followed up by low volume gains, whether it's an index or an individual stock, not good to see. But we're going to have to take these gains for what they're worth. 1.5% so far for the NASDAQ composite, and let's see, the S&P 500 also at its session high now, up 1.6% to 1356 for the S&P 500. And just for kicks, why don't we check in on the Dow Jones Industrial average, 1.5% gain, up about 192 for the Dow to 12,573. So all of these indices are back above their 50-day moving average, so that's a compelling sign. But again, there's just this low volume period in the market. Not much has really changed. We're just going to see this most likely back and forth volatile action. You're buying stocks today, that's fine. You're probably buying a lot of low volume moves. You're going to have to be ready to probably take profits in 2-3 days time. That's the way things have been going. It's a trader's market. I did add a new name to my Ultimate Growth Stocks model portfolio today. It's working nicely. Great fundamentals, great technicals. I'm going to continue to keep an eye out for these types of stocks. That's the typical type of growth stock that I target for my Ultimate Growth Stocks model portfolio. If you want to get a free trial, you can just go to kenshreve.com, and that takes you over to my TFNN information page. Click on the green Ultimate Growth Stocks banner, and you can get 30 days free of my newsletter to check it out. So still have a pretty healthy cash position in there, but hey, always looking to put money to work, but I just want to make sure that the market environment is conducive to making money. And even after today's gains, I have to tell you, I mean, without any volume, without any conviction behind the buying, this it still strikes me as just summertime months. We're just going to continue to see volatility. There are really no signs at all today that big money is coming in from the sidelines. Seeing a lot of big movers in the growth stock universe that I cover, but just about every single stock is moving higher in shrinking volume. So that's a problem. Markets can go up in light volume for a period of time, and that's going to be tough for people like me that like to buy volume. You got to make a decision. You're just going to buy the low volume, and and then hope it works out. Frankly, I may be forced to do that because it's probably not likely that volume is going to be coming into this market until the summertime ends and we start heading into the August, September time period. So tough market. Good gains today. Right now, NASDAQ volume is tracking about 23% lower than what we saw on Thursday, and what we saw Thursday was about 1.7 billion shares, about average, maybe slightly below average, but tracking well below the 1.7 billion level we saw on the NASDAQ yesterday. NYSE volume yesterday about 760 million. That's tracking about 15-20% lower as well. So bottom line with today's move, you're seeing a lot of good action out there. Very, very few stocks rising in expanding volume. If new money were coming in from the sidelines, you'd see some volume conviction behind the move today. And unfortunately, we are not seeing it. So check in on the 10-year note here, see where that yield is. Looks like right now, right around 1.49%, 1.49% on the 10-year note, and then on the, let's see here, that's the 10-year is 1.49, and then the 30-year is going to be about 2.58%. U.S. dollar index recently trading around 83.37, slightly below a swing point of 83.54, down about 0.4% today. Dollar, weak today, not by much though, not by much, only down about 0.4%. But mentioned in yesterday's show that it's been such a quick move up off the bottom for the U.S. dollar index. Why don't we take a look at it here? The dollar index that I have here is as of yesterday's close. This is not so you'll see a breakout for the dollar index closed yesterday at 83.66. Right now around 83.37, like I said. But wouldn't be surprised to see a little bit of a pullback here. But certainly continued strength in the dollar can't be ruled out with the euro acting as weak as it is. Some short covering going on with the euro today after an extended period of weakness. Let's check in on the currency shares Euro Trust, and not that great a gain actually for this ETF that tracks the euro. It is up almost 0.4% today to 121.80. Why are stocks in a good mood today? Well, China's economy grew at a rate of 7.6% in the second quarter. In the first quarter, China's economy grew at a rate of 8.1%. So there was some trepidation, some nervousness that China's GDP in the second quarter would come in lower than expected. That was not the case. 7.6% growth was pretty much in line with what the market was expecting. So a lot of the selling in the market recently, a lot of investor nervousness has been about a sharp slowdown in economic growth around the world, particularly in China. I mean, remember the China indices, why don't we, while we're talking about China, let's take a look at the Shanghai Composite here. This is an index that has just been obliterated in recent weeks. You can see off high of around 24.75. It's now around 21.85, trying to come up off a bottom here, but China stocks have really been taken to the woodshed, and really nothing in China. At one point, the U.S. stock market had a lot of interesting ADRs from China, good fast-growing companies that were capitalizing on a fast-growing Chinese economy, but right now there's just not a whole lot popping up in my radar from China. Remember a name like Baidu, internet search firm, very similar to what Google does in the U.S., but you can see Baidu has just been taken apart in recent weeks from a high of 150 down to about 109. So really not a whole lot interesting in terms of investment opportunities going on over there. But all that said, 7.6% growth for China's economy in the second quarter was pretty good, and a pleasant surprise for many that were expecting a softer number there. On the home front, producer prices this time around up 0.1%. The estimate was for a decline of 0.6%. Came in a little worse than expected, but the core rate, which excludes food and energy costs, rose 0.2%. That was in line with expectations. Also, the Michigan consumer confidence reading. The University of Michigan's Consumer Sentiment Index fell to 72 for July. That was worse than expected. And economists were looking for a reading of 73.5. Market being led today by the financials. Let's take a look at the Financials Select Sector Spider Fund. XLF outperforming nicely today, up 2.7% to 1470. Its chart looks a lot like the major indices at this point. Came down to its 50-day moving average recently, is rallying nicely here. Approaching a swing point of 1480, 1485 thereabouts, but we'll see. Good day for the financials. J.P. Morgan and Wells Fargo out with earnings earlier today. Let's take a look at J.P. Morgan Chase. It is up close to 6% today, $1.96 to 36.07. Not a stock that is all that interesting to me right now. There are some financials that look pretty good here. J.P. Morgan still well off its 52-week high, kind of a sluggish laggard stock. You've got a swing point over here of 37.03. I think it would be more compelling if J.P. Morgan eventually breaks out over that $37 level. But decent earnings. They had a trading loss of $4.4 billion in the second quarter, but still managed to earn an overall profit of almost $5 billion. Earnings down 5% from a year ago to $1.21 a share. Sales down 18% to $25.1 billion. That's J.P. Morgan Chase. Much more interesting stock in the financial sector that also reported earnings earlier today, Wells Fargo. What you have with Wells Fargo, nice little breakout today from a cup with handle base. Cup with handle base. You can see the handle area where the last remaining sellers get shaken out of the stock. Wells Fargo breaking out today. And a nice breakout, still within buying range here. Certainly not extended. You're not chasing Wells Fargo here, even though it's up 3% today to 33.85. Wells Fargo easily still within buying range here. You're looking at a swing point of 33.73, something like that. So it's trading right around that swing point, and decent volume in the stock as well today. So Wells Fargo earnings up 17% to 82 cents a share. Sales up 2% to 22.6 billion. Good example of a base breakout here. Like to buy base breakouts, but only in the right market conditions, when I'm convinced that new money is coming in from the sidelines. That, my friends, is still not happening yet, unfortunately. So, new buys are risky. Market's kind of forcing us to be long here. Got to be quick with our positions. We'll be right back, folks. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Happy Friday, TGIF. And I got to tell you, not a bad day for the market. Friday the 13th, supposed to be an unlucky day. Well, kind of a lucky day for stocks, seeing a lot of big movers out there. The question is, how much can you trust the movement in the market today? That is the issue. This is Tom and I always joke. I come on his show a couple times a week, and it's just a deviant market. It's just a deviant market. It tries to suck you in, and then it spits you out. It sucks you in again. It spits you out. And these are kind of the times that we're in right now. And I think for individual investors, the important thing to remember is that I do believe that sometime before the end of the year, hopefully at the end of the summer, maybe in August, maybe in September, may take a little while longer than that, but we should get a nice tradable rally here. Heck, I mean, the tradable rally could already be upon us, and that's why, I am not averse to going long here, because I don't want to see this market go up another 5% from here with me, having a big cash position in my model portfolio. So I did add a stock today that's acting well. I'm seeing more intriguing setups out there, but I have to tell you, a name like let's take a look at a name like Zillow. Recent new issue, provider of online real estate services. You had a nice breakout in Zillow yesterday. The problem is you had a no volume breakout. It was just a below average breakout. You can see volume was higher. It had declined for 3 or 4 days prior to yesterday's breakout, and you did have some decent volume yesterday and some good follow through today, but you're still looking at 2 days in a row where there's just not a whole lot of conviction behind the buying. The thing with Zillow is what I plan to do with this one is that it is fast approaching its 52-week high of $44. what I expect could happen here, Zillow right now is trading around 42.35. As it approaches that high of 44.23, this thing could start to drift lower. So while you have a cup with handle breakout in Zillow going on right now, a low volume breakout, which is risky, it could approach that 44 high that was set over here back in, what was that, late... yeah, it looks like May 9th. May 9th over here was the $44 high. But as it gets closer, it could start to drift lower, form another little handle area, and that could give us an opportunity to get in here. But, you know, breakouts is all about conviction behind the buying. Are big investors in there helping fuel the move? I'm just not seeing it yet in Zillow. I like this company a lot. I have been pounding the table on it. Fundamentals look outstanding. Good management team in place, but you know, I still don't own it because I really have to stick to my guns and wait for some volume here. So some decent movers in the market, some breakouts. LinkedIn is another high beta kind of aggressive growth name that's looking pretty decent here. Kind of waiting for LinkedIn right now to clear the $110 area, but this is the same type of deal. You see a lot of low volume gains in LinkedIn, not showing meaningful signs of accumulation yet. I do think that this is a stock that growth fund managers will eventually want to own at some point. LinkedIn is up close to 1% today to 105.62, but the line in the sand here for LinkedIn is at $110 price level. If it can move over that price level, see some volume come into the stock, I think it would be a pretty good buy. Taking a look at gold today, August gold jumped $26.70, 1.7% to settle at $1,592 an ounce. Part of the reason of gold's performance was that pretty good economic data out of China. It looks like there could be more easing on the way in that country. Let's take a look at GLD after we mention our gold quote. Normally check on the GLD. It is trading just underneath its 50-day moving average here. Still not clear to me. I've been saying this in recent days, and I'll continue to say it until the facts change, but it's just not clear to me that the GLD is ready to start an uptrend here. 50-day moving average still looks like a resistance level here. GLD up 1.1% today to 154.29. 50-day moving average at 154.47, so only about 17-18 cents below its 50-day line here. So that's a look at gold. Crude oil today up 1.2% to 87.10 a barrel. Folks, don't forget, next week, couple of IPOs going to be hitting the market. I don't know when they're going to come public. That has not been announced. They haven't priced yet, but they did set terms. Kayak Software. I don't have charts for Tiger TV, but Kayak Software, KYAK. They operate an online platform that allows consumers to compare flight, hotel, and travel info. They announced terms. They plan to raise $82 million by offering 3.5 million shares at a price range of 22 to 25. That's going to trade under the ticker symbol KYAK. And there's one more. We'll talk about that when we come back. Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. That is the number to use to get through. I mentioned earlier in the program that this show is available as a podcast on iTunes. If you don't want to sync with your computer to get that podcast, a subscriber let me know earlier today about an app called Downcast, which apparently is an easier way to access podcasts. So be sure to check that out. Before we went into break, I was talking about Kayak software. They're going to be pricing next week. Should come public sometime next week. KYAK, and then there's another IPO getting some fanfare called Palo Alto Networks. PANW will be the ticker symbol there. They provide firewall products to enterprise customer. They plan to raise about $220 million by offering 6.2 million shares at a price range of 34 to 37. So Kayak KYAK, Kayak KYAK, and Palo Alto Networks PANW. Watch for those IPOs next week. The home builders continue to rock here. Let's check in on iShares, Dow Jones U.S. Home Construction Index Fund, off its highs today. It hit an intraday high of 1731, now trading around 1711, up 1.6% on the day. Home builders continue to show uncanny price strength. Probably the best name in the group group would be Lennar, L-E-N. But interesting price action here after hitting an intraday high of 31.82. It is now near its session low, trading around 31.16. Up 0.3%. So home builders continue to do pretty well here. Not surprisingly, you'd expect a name like Eagle Materials to do pretty well. Little known name here, EXP, Eagle Materials. It makes gypsum wallboard and cement products for residential and commercial markets. Nice day for this stock. It is also trading in the bottom half of its trading range now, but still up 1.2% to 38.70. Eagle Materials, definitely a stock under accumulation here. Remember talking about so many stocks out there that just aren't showing meaningful signs of accumulation. Looking in Tiger TV here, though, you can see a lot of blue volume bars here in Eagle Materials. This is what accumulation looks like. Okay, you've got red volume bars, scant selling pressure. You got blue volume bars, much higher, indicating accumulation here. Flirting with a breakout here over 38.62, trading just slightly above that swing point today. But Eagle Materials popped up on my screens today, not too bad. And you know, a lot of stocks out there still acting okay. When the market was selling off in recent days, yeah, there was a lot of damage done to names like Amazon and eBay and, you know, Chipotle. I mean, the list goes on and on. But some names still hanging in there pretty well. Equinix, this is a big data center operator, respecting its 50-day moving average here. Equinix right now trading up $1.44, almost 0.9% to 169.38. Can't rule out continued relative price strength in this name. Equinix is a high quality tech name. Probably going to see good results when they report second quarter earnings coming up. But Equinix showing good supporting action at its 50-day moving average. And you know, we talk about Visa and MasterCard. Really like Visa here. Visa also nice bounce off its 50-day moving average yesterday. Not a whole lot of volume. Again, volume pretty disappointing yesterday, despite a nice bounce off the 50-day, and good follow through today, up $1.18, almost 1% to 123.82. So with Visa, you had a recent breakout over maybe $121 a share thereabouts, and now you have a new swing point around 127.50. So again, if new money starts to come in from the sidelines here, Visa is a name that I'm sure a lot of growth managers would not mind owning. Let's check in on its industry group here. MasterCard in a little different situation. You didn't really get a bounce with conviction off the 50-day moving average with MasterCard. Really wasn't much conviction with Visa either, but Visa a little bit healthier chart at this point. But MasterCard back above its 50-day moving average. It is up 1.1% today to 428.88. This is still a stock consolidating gains, not near a buy point at this point. Let's take a look at a former holding in my Ultimate Growth Stocks model portfolio, a stock that I very easily could revisit at some point because of its improving technical picture here. Dunkin' Brands came down pretty good during the month of June, but look at this, nice bounce off its 50-day moving average. Like the technical action here, like the company's expansion plans. I think for a retail restaurant stock, this is a good name to own. I'm just going to wait for a buy point here. This is another case where I want to see more signs of accumulation in this stock. Good day of outperformance today, up 99 cents, 2.9% to 34.86. So Dunkin' Brands definitely on my radar here. This brings up a good point with how I go about managing a model portfolio. I mean, make no mistake, we are in a trader's market right now. I don't really consider myself a trader. On the one hand, if I buy a stock and it doesn't do what I expect it to do, yes, I'll trade it. I may cut it loose 2 days, 3 days after buying it. If my timing is right and we're in a good market, I can hold on for a much longer period of time. So that's why buying at the right time is so important. But if I'm buying a stock during a volatile market period, I realize that my holding periods are going to be much shorter. The market's going to force me to adopt that kind of strategy. So I did own Dunkin' Brands for a while. I sold it, and this is one that I definitely could revisit. In fact, I've been raising cash recently, and there are some names that I sold that hey, the market was telling me to sell them. The market was telling me to protect capital. The market was telling me not to watch small losses potentially get out of control. But if this market continues to work its way higher, and the market technicals start to improve, just because I sell a stock doesn't mean I will never ever revisit it. So Dunkin' Brands is definitely on my radar here. And Trip is another interesting name. TripAdvisor, they operate a website called tripadvisor.com. They provide online travel content, aggregated reviews on tripadvisor.com. Big move for the stock today, up 5.1% to 46.13. I don't think it's buyable. There's a decent amount of volume in TripAdvisor today, but this is one where I really would like to see it base for a period of time. It's been running higher, showing good supporting action at its 50-day moving average, but again, a name like Dunkin' is more interesting right now than Trip. Trip really hasn't taken enough time to kind of base and consolidate, and after the big move it's made, I would really like to see that happen in this stock before I consider adding it to the model portfolio. Let's take a look at Community Health Systems. Remember, the hospital stocks did very well after the Supreme Court basically upheld most of Obamacare. Really like the trading here in Community Health Systems. This is a stock with a market cap of $2.5 billion, so it's a small cap stock, but very, very bullish technicals here. I like see the big move the company made. This is when the Supreme Court ruled on Obamacare, and I just love the fact how it's holding on to its gains here. Okay, this is very bullish technical action. If you see a renewed burst of buying, signs that big investors are in here accumulating the stock, you could get another buy signal here. So if you missed the move several days ago, its chart right now is bullish. It is showing very constructive action. So among the hospital operators, Community Health Systems is a name that is showing very strong technical action right now. Let's take a look at Simon Property Group, SPG. I don't look in the REIT area very much. This is a decent yield of 2.5%, but another stock here with a bullish chart. Simon Property Group up 1% today to 158.44. See, it made a move higher for 6 days in a row, had a nice breakout, nice gap up in this area here, and look at what it's been doing, just kind of holding nicely above its 50-day moving average, holding on to its gains. It's important to pay attention to price strength. This is another way I go about doing things with my Ultimate Growth Stocks model portfolio. I do not buy technically damaged stocks. Okay, I like strength. I like earnings and sales momentum. I like fundamental momentum, but I also like technical momentum. And technical momentum means looking at strong price performers. So I'm not looking at stocks 30, 40, 50% off their highs. I'm looking for stocks that are showing strength and holding gains after showing that strength, because it's just a good support sign. And so Simon Property Group is another one acting pretty well in this market. Pharmacy Benefit Manager, Express Scripts, also technically looking pretty strong here. Here's a daily chart. We'll look at a weekly in just a sec, but it's outperforming today, up 2.8% to 57.35. Move over, take a look at the weekly chart for Express Scripts, and we'll see that this one still could be on the verge here of a breakout from a longer base. So really looking to see if it can break out with conviction over this $58, $59 level. Still has a way to go, but a stock that's definitely under accumulation, still has not broken out yet. But this is another example, sort of like we were talking about Zillow earlier in the show, a stock that is approaching a former high. Sometimes rather than chase it as it's working its way higher, building the right side of a base, wait for a little shakeout, wait for a little pullback, and that after that happens, where some sellers get shaken out of the stock, that can often pave the way for a nice breakout. Also looking at Monsanto here, M-O-N, kind of building a nice watch list for you listeners today. Monsanto, ticker M-O-N. Its price strength has to be respected here as well. Of course, Monsanto is ag play. They provide agricultural products for farmers. Basically operates in two segments, seeds and genomics, and also agricultural productivity. So Monsanto having a good day today, up 1.4% to 83.81. So some decent action out there. You know, can't give up on this market. You know, everybody's waiting for you know, some conviction behind the buying. I think that's going to be a tall order, but it could happen. Certainly the percentage gains in the major averages today, they can't be ignored. You don't want to be, you know, caught here too underinvested. I remember when the market was going down. Let's pull up a chart of the NASDAQ composite here again, and you know, we had the buy signal on June 29th. That was that big gap up here on June 29th. 3 more days of gains, and then it just falls apart. I mean, the rally completely falls apart. You've got higher volume declines in the NASDAQ composite. You've got some higher volume declines in the S&P 500. You've got stocks breaking down left and right, and then, you know, so you say, well, if the market's acting so bad, you want to own a short ETF or maybe go short stocks. But this is just how difficult this market is, because, you know, there were people that went short yesterday, the day before, and now they don't know what to do, because the, you know, market's having such a big day today with, you know, the NASDAQ now up 1.5%, the Dow up 1.6%, S&P 500 up 1.6%. Let's take a look at some of these short index ETFs here. Let's take a look at the, what is it, the ProShares, the PSQ. This is short the QQQ. You had a breakout over a descending trend line yesterday. The PSQ did close near its session low, but you can see how that trade would have failed pretty quickly, no doubt about it. If you wanted to short the S&P 500, S&P 500 also broke out over a descending trend line yesterday, but it also finished near its session low. It's down 1.7% today to 36.53. So it's still a market that's going to do its best to whip us around. And again, when you're in a bona fide uptrend and new money is coming in from the sidelines, it's typically not as whipsaw an environment. That's basically when buyers have the upper hand over sellers, volatility is typically going to subside. It's going to be easier to hold on to stocks. Right now, buyers don't have the upper hand over sellers, and sellers don't really have the upper hand over buyers. It's just like one group takes control one day and the other group takes over the next day. That's what market volatility is. That's what whipsaw action in a low volume market environment can do. So still tricky, but as we've talked about today, a lot of interesting movers out there, stocks that deserve our attention for possible long candidates. DaVita, another healthcare name, acting very well here. A stock that has really only consolidated here for about 5 or 6 days. Certainly didn't form a base, but it's up 1.2% today to 98.92. Big move for the stock during the month of June, but like how it's just, you know, held really firm near highs, and again, that's just a sign of strength and support. DaVita is a solid healthcare name, and between healthcare and retail, still a lot of interesting names out there. Just keeping the watch list fresh at this point, ready to put money to work, but still have to be very discerning with new buys. A new buy here, a new buy there, new buy here, slow and steady in this market. All right, folks, headed into the final break. Ken Shreve with you, Breakout Investing. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. A nice low-volume move for the market today. NASDAQ volume and NYSE volume, for that matter, tracking about 20% lower than what we saw yesterday. So not much conviction behind the buying. Hard to put a whole lot of faith into or behind the gains that we're seeing today. But understand that we could still head higher here. So it's important to have a watch list of stocks ready and be ready to selectively put money to work here, and that is definitely my strategy with the Ultimate Growth Stocks model portfolio. I did add a new stock to the portfolio today. If you want to see what that stock was, check out a 30-day free trial to Ultimate Growth Stocks. You can do that at kenshreve.com. That'll take you to my TFNN page directly, and you can click on the green banner, Ultimate Growth Stocks, and you can get 30 days free of my newsletter. So be sure to check check that out. 5 minutes left to go in the market right now. We've got the NASDAQ composite up 1.5%. We've got the Dow up 1.5%. We've got the S&P 500 outperforming by just a little bit, up 1.6%. Mentioned some of these healthcare names doing well. Talked about DaVita. They're a provider of kidney dialysis services, holding gains tightly, I should say. But DaVita doing well, and Edwards Lifescience also deserves some attention here. Ticker EW. This one looks like it's ready to build a base. It's not ready yet. Stock is up 61 cents today to 101.43, but holding well above its 50-day moving average. Remember, a lot of stocks are below their 50-day lines now. The ones below their 50-day moving averages, I'm really not paying nearly as much attention to as those that are holding above the line. So, Edwards Lifesciences. They make products to treat advanced cardiovascular disorders, but good stock here, holding gains nicely, and could have more left in the tank. I'm also pretty encouraged by how Apple is trading. This is another former holding in the model portfolio. What you have with Apple is a potential breakout here taking shape over that $620 price level. Now, you've got earnings July 24th. Buying a stock ahead of earnings is somewhat risky, but you do have a very bullish technical setup here. Apple is another stock that really is showing nothing in the way of accumulation. Not clear to me that big investors are re-entering this stock, but that said, it does have a bullish chart right now. So Apple right now trading around 604.83. It's underperforming a little bit today, only up 1%, but technical picture very much intact here. This is one that could work, but I'm going to wait for Apple to prove itself more. Heavy volume breakout over 620. I think it would be worth a nibble here. Some other interesting setups here. Cabela's is an interesting chart, and Cabela's is basically they operate outdoor equipment stores. It's in a nice little base here as well. Seeing if this one can break out over 39.48. Another small cap name here, 2.7 billion market cap. And sales growth in recent quarters is not really up to snuff like what I want to see. Typically, I like to see 25, 30, 50, 75% year-over-year growth. Cabela's is kind of single digits for several quarters in a row, but still a stock under a fair amount of accumulation here. A good base taking shape. This is another breakout candidate. So, a high-quality company, good balance sheet, good small cap retail name here. And last name we'll touch on before we go to break. Let's talk about the Fresh Market, up 1.3% today to 55.42. Like this company's growth prospects a lot, folks. Next week, very, very busy week of earnings. A lot of large cap tech. eBay on Wednesday, Qualcomm on Wednesday. We've got Chipotle on Thursday, Google, Intuitive Surgical on Thursday. Whole bunch coming up. I'll look forward to talking to you Monday at 3. Coming up next, the Tom O'Brien Show. Have a great weekend.